Welcome to the Del Walmsley Radio Show. Del challenges the status quo, questions everything, and empowers you to return to your core beliefs to make your life better. If you're ready to hear the truth and get your roadmap to the lifestyle you really want, the next hour will change your life. And now, your host, self-made millionaire, national award-winning investor of the year, CEO and founder of Lifestyles Unlimited, Del Walmsley.
Welcome to the Del Walmsley Radio Show, where the hype ends and the help begins. I'm your host, Del Walmsley, and as always, we're working on your financial freedom. So what is financial freedom? This weekend, I forced myself to do something that I almost never do, and that is to sit and listen to a couple of talking head financial planners just out of curiosity. I said, look, let's just give these guys a chance to say something and see if it means anything. Now, I probably shouldn't have done it on a weekend show because that's when all the rookies come out and, they buy their little piece of airtime for 30 minutes or whatever. And it's guys that during the week, sell stocks and bonds and financial products and so forth. But on the weekend, they're trying to direct some traffic to themselves by doing radio shows, which nothing wrong for it. I mean, business is business. But the point is that when you listen to these people, and I force myself to listen to this dribble drabble, it just blows my mind how little they actually have to say and how almost everything they said is diametrically opposed to what is actually true about making a lot of money. They just don't have any idea. And I know that they don't make any money. I mean, I know the only money they make is by getting paid commissions or salaries of doing what they do. They don't actually make money for themselves by investing their own money. I know that just by listening to them that they couldn't possibly make any money that way. And secondly, because I've met many of these people. I mean, over the 25 years I've been consulting people, I've probably ran into 25 or 30 financial planners that have said right to my face, I know that we're terrible. I know that we're selling them bad products. It's just what we do. It's the only products to let us sell. I'm not buying that garbage. I'm over here buying real estate with you guys. That happens way more often than you think it does. These guys can't admit that on the radio. They can't admit it to you because their boss would fire them. And they do have bosses, you understand. There are very few of these guys that have their own practices. Most of them work for somebody, or they don't work for somebody. They're an independent contractor that sell products from some larger group. Some larger group is going to dictate what products they can sell. You got to sell within our bucket, et cetera, et cetera, et cetera. But what I'd like you guys to do today, what I think would be interesting if we could stimulate this conversation, I would really like to have you call into the show today and tell me if, number one, do you listen to these kind of guys on the radio? If so, what do you get out of it? What are you actually getting out of listening to these types of guys that benefits you, other than just because you got nothing to do and you're driving and you're listening? Are you laughing at what they're saying? Or are you taking them seriously? Do you actually think they can help you pick better financial products to purchase? Or do you just see them as what they are, which is just talking advertisements for their financial book? I'd really like to hear what you have to say. And listen, if you're diametrically opposed to me, unlike any other radio show host out there, I'm not going to cut you off. I would like to discuss it with you, but I would never cut you off. I would let you make your point. So don't be afraid to call if you actually see things differently than I do. I would appreciate if someone or multiple people call and give us their opinion, because I'm really curious, after sitting there and forcing myself to listen to these guys for 30 minutes, why anybody would waste their time listening to these guys. Our number here is 866-945-6565. If you'd like to call and discuss any of this craziness, give us your opinion on this stuff. It'd be interesting to hear. Now, as we go through this, I have to tell you that the very first and most important difference I see between them and what I'm talking about is these guys are all talking about throwing mud up against the wall and hoping something sticks by the time you're 65 years old or 70. And a lot of times now they're telling people to try to retire. You need to push off till 70 because you're not going to have enough money left over if you start at 65. It's just, people are living much longer now, so you need to work much longer. See, in my mind, that is just so diametrically opposed to what it is that I'm all about. 2.5 years after I started investing in real estate at 34 years of age, I quit my job and never went back to work again. I want that to happen for as many of you as I can pick off out of this society. There's got to be some of you out there. Give me a call. Tell me if you want this. How many of you would like to retire in 2 to 5 years and just be done with it and have just as much money as you would have had, if not more, than working the rest of your life. Is there anybody out there, come on, anybody out there that would trade their financial plan that these guys have put together for them? Now, first of all, let's just suspend disbelief for a minute, okay? Now, I can prove person after person after person, testimonial after testimonial after testimonial, that this happens on a regular basis at Lifestyles, okay? But just suspend that for a second and call up and say, hey, I would much rather save for the rest of my life until I'm 65 or 70 years old than to go ahead and get this thing knocked out in 2 to 5 years. Call me and tell me that's actually true. I got to hear somebody say that. If it's not, call me and say, no, of course not. I'd want to do it right away if I actually could believe it. But the point is, if you now hear it, you could look into it and find out it's true. Then the question is, why would you listen to these financial planners? See, it's chicken or the egg. Which one comes first? Knowing these guys are dumb as a rock and don't know what they're talking about? Or finding out that they're dumb as a rock and don't know what they're talking about at your personal financial expense? Which one is it going to be? Are you going to let them destroy your financial situation? Or are you going to go and research something different? But again, before you even go there, let's just start with the basic premise. They're talking to you about, even if they're the best at what they do, if they're really good at what they do, they're talking to you about retiring when you're 65 to 70 years old. Now let's say that I'm the worst at what I do. And as a real estate investor, I'm telling you 2 to 5 years, but I'm terrible, so it takes you 7. Wouldn't you rather fail your way to success my way than to succeed at failing? In fact, there's an old saying, let me ask you this question. If I told you it was my intention to fail at what I was going to do, and then I failed, have I actually failed or have I actually succeeded? So in other words, if you're convincing yourself that you've got to save until you're 65 to 70 years old, for the rest of your life, you got to bust your butt and save for all that time. And these talking head guys are going to make sure that by the time you get to be 65 or 70 years old, you'll have enough money to retire. If you actually did that, it worked, would you not already have failed? Because you've lost your entire life to the process? Whereas if I could get you retired in 2 to 5 years, would you not have already won? Because you beat the odds, you beat the age limit requirement to have to work till? So you see, whether I can do it in 2 years or I can do it in 7 years, it's irrelevant because both of them are at least 100% faster than what these guys can get you there, and probably 300 or 400% faster. So why would you want to do it their way? 866-945-6565. Give me a call. Let me know, because I'm telling you, these guys are talking out of the side of their mouth. If you could just get to where I'm going to take you today, I'm going to take you there piece by piece again, because there's people that are listening brand new every day. I realize that, so this is your first time of hearing it. But most of you out there have heard this more than once, and some of you haven't taken action yet. And for those of you that are in that situation, shame on you. You should have taken action by now. In fact, I have to tell you, just the other day, we had a record number of people show up for one of our seminars. And I said, holy smokes, what's the deal? And the speaker said, I don't know. I talked to him. He said a bunch of them say that they just got too busy during the holidays to do something, so they put it off. And, you know, some of them, hey, that's a New Year's resolution to take that action. Others, it was just, I couldn't get it done during the holidays. I was too busy. But whatever the excuse was, they're here now. And it was close to 90 new people that are going to change their life just in this one seminar. That's pretty good, guys. And that was just in one free workshop seminar. So, you know, you put those together, we do about 20 of those a month. We could have quite a few people changing their life in the near future. All right, again, our number is 866-945-6565. We've got to go to a break. And when we come back from that break, we're going to take calls. I see someone's already calling in, but we've only got, I think, 20 seconds left in this segment, so I don't think we're going to have time to go to it. So go ahead and be the first one on, and we'll get you right on right when we get back from the break. Again, our number, 866-945-6565. We'll be right back with the Del Walmsley Radio Show.
You're listening to the Del Walmsley Radio Show. Del will be right back with more life-changing principles in just a few minutes. Welcome back. Now here's some more unconventional wisdom to set you free from the man on a mission to retire America, one person at a time, Del Walmsley.
Our number here is 866-945-6565. Holding through the break now is Ken. Ken, how can we help you today?
The question I have is about depreciation. How much can you depreciate on a house on a yearly basis?
All right. The most common way to take depreciation is what we call straight line depreciation. And the way you would calculate how much you could take, Ken, is you would take the value of the land away from the total value so that you have only the value of the improvements, which is, the house, the buildings, and so forth. Right. And you divide that by 27 and a half years. And by dividing by 27 and a half years, you're going to come up with an amount each year that you can write off. Now, I can give you a rule of thumb, and that is I find whenever I do examples of it, it usually comes out to be about $31,000 per $1 million. So you can scale that back and say, $310 a year on some amount, whatever. Now, there is another way to take the depreciation, Ken, and it's called accelerated depreciation, and that's called cost segregation. And what you do when you want to do cost segregation is you break your real estate component up, not into just land and buildings. You take away the land, and then you take all of the building and you tear it apart into things that will last for only 2 years, 5 years, 7 years, 10 years, 15 years, and then all the rest is lumped into the 27 and a half year period. So what you're doing is you're taking some stuff and saying it's only going to last 2 years, so I'm going to depreciate it very quickly, not over 27 and a half years, but over 2 years. And the same thing with the 5, the 7, the 10, and the 15. And hence what it does, Ken, is it usually at least doubles the amount of depreciation you can take. So on $1 million piece of real estate, that might be as much as $60,000 instead of only 31. So that really benefits quite a bit.
Is that what you're talking about when you're taking in rent, like you're always saying, like it's tax free? Is that what you're saying? Is
Absolutely.
Okay, that's what you're talking about.
Yeah, the depreciation covers the positive cash flow. So if we didn't have depreciation, we would have to pay taxes on that income. For example, if you have a property like a mobile home park, I get asked this all the time, why don't you do mobile home parks? And I say, well, because first of all, mobile homes depreciate. They become worth nothing very quickly. But not only that, there's nothing to depreciate because there's no asset value. I mean, they're worth nothing. So if you depreciate something that's only worth $5,000 or $10,000, your depreciation isn't enough to cover the cash flow that comes out of renting out that mobile home. So it might be a good cash flow device, but the income's then taxable at ordinary income tax rates. So it's very important to have that depreciation. Another problem people run into, Ken, is they pay cash for houses. And what happens if you pay cash and you don't have a mortgage is the cash flows on these things are way too large for the depreciation to cover them. Like if you rent a house for $1,000 and $200 a month of that is taxes and the rest $800 a month is profit, that house isn't going to have enough depreciation to cover that. But if you break that down and put a mortgage on there and now your cash flow is only, $400 a month instead of $800 a month, now your depreciation can cover most, if not all of that.
Yeah, unfortunately, you still have a mortgage on. You're making a mortgage payment.
It doesn't bother me at all because I'm not making it. My tenant's making the mortgage payment. I'm not.
That's true. Okay, very good. Thank you.
All right, Ken. Thanks for the call. 866-945-6565. Del Walmsley's 3 rules of success. Never lose money. Number 2, there's got to be cash flow. And number 3, you can't get rich slow. So let's start with rule 1. Never lose money. Somebody sent me an article. It says, hedge fund manager loses 99.8% of his fund in 9 months and tells his investors he's sorry for being overzealous. I can't even believe this. This is the most unbelievable story I've ever read. Somebody sent it to me. It goes on and says, the that the hedge fund manager truly said he was truly sorry after losing virtually all their money. Owen Lee, founder of Canary Capital in New York, said Tuesday that he had lost all but $200,000 of the firm's capital of $100 million. He says, "I take responsibility for this terrible outcome," Lee wrote in a letter to investors obtained by CNBC.com. "My only hope is that you understand that I acted in an attempt, however misguided, to generate high returns for the fund and its investors. But even so, I acted overzealously, causing you devastating losses for which there is no excuse," he added. Lee said in a letter that he made a series of aggressive transactions over the last 3 weeks to make up for the poor returns in December. He said he had bet on stock price options, predicted on the broader market rising, but the stock indexes instead fell, causing huge losses along with several undisclosed direct investments. Lee is a former trader for Raja Rajanam's Galian Group, which collapsed amid insider trading charges. Lee's lieutenant at Canary is Ken D'Raj, who joined in 2013 after having retired as the global head of fixed income sales and trading for Morgan Stanley. So even guys from Morgan Stanley can lose your money. But get this. What I don't see here, guys, I don't understand this at all in the article. CNBC, where is it in this article that this guy's going to jail? I mean, first of all, he worked for a firm that was closed down because of insider trading, and they let him keep his license. Then he goes and opens another firm with this Morgan Stanley guy, and he loses $100 million of people's money. I mean, that's worse than being a Ponzi scheme. And yet, these guys still have their licenses. And what I'm saying to you, call me and tell me why you let people like this manage your funds. What is it these talking heads on the radio can tell you that you can't figure out yourself? What is it they're worth doing that they take 5 to 7% of your net financial, your investment, your portfolio? They either take it on the front end, they take it as loads on stuff they sell you, or they get paid commissions, one of the three. But all of it comes out of your pocket. And yet, there's no fiduciary responsibility for them to not lose your money. There is fiduciary responsibility for them not to steal from you and put it in their own pockets, but there's nothing wrong with stealing from you for other people's pockets and losing all your money. Think about this. What if they've got firms out there? What if these investments, these undisclosed investments, were friends of theirs from China or from India, wherever these guys are from? What if that's the way it was? What if they lost your money into their firm, into their funds, so that they could make millions on the side? Would you even bother to find out? Will the government even bother to find out? I don't think so. And I'll tell you why when we come back. Because when we come back, I'm going to show you how, if you go to the internet right now and you Google losing money in the stock market, you're going to find so many articles out there about this very same thing that it's going to blow your mind. That's what I don't understand.
Our number here is 866-945-6565.
Feel free to call in during the break. The lines are open.
You're listening to the Del Walmsley Radio Show. Del will be right back with more life-changing principles in just a few minutes. Welcome back. Now here's some more unconventional wisdom to set you free from the man on a mission to retire America, one person at a time, Del Walmsley.
Our number here is 866-945-6565.
Holding through the break now is Robert. Robert, how can we help you today?
Yes, sir. I've got a builder developer that I work for. I was wondering about, he's asking for investors, and I thought about, maybe investing some money, on his deal. It's a new project. I was wondering what the return, if I invested like $300,000 on that, what kind of return I would get and how soon it would come back to me, I guess.
Well, First of all, Robert, there's no way I would know that because I don't know what your builder developer's promising you. Has he given you some kind of a prospectus, PPM, or any type of written prospectus of what he's planning on doing and what you would get out of it?
No, he has not.
All right, then I would run, not walk, as far away as you possibly can. Because that's just not the way you do business. This stuff needs to be in writing. You have to have SEC attorneys put it together correctly with all the correct promises being made. I wouldn't touch that with a 10-foot pole. The other thing is I've seen most builders and developers pay a very low return to the people that invest with them compared to if you go out and buy your own stuff. For that $300,000, Robert, you could go out and buy an apartment complex that's already built for a third or a quarter of the amount he's going to pay to build one. And you could double your money. You could make 100% return on that $300,000 plus a cash flow besides that of somewhere between 10 and 20%. Now, you understand he's not going to pay you cash flow because he's going to need that money, all that money to build that thing. You're not going to get a dime until it's done. And when it's all done, then you get some kind of return, but it's nowhere near probably any better than the stock market, to be honest with you. I would run away from that, my friend. Quite honestly, I run away from builders all the time.
If I was to do that, like you're saying, something that's already built, then when would the return be on that?
Day one, if done correctly. You'd start earning 10 to 20% right away, and you'd have something called an unrealized capital gain there in the future. Unrealized in that the property would be worth more, and then you'd have to refinance it to pull the money out tax-free, or you could sell it and do a 1031 and move the money into another deal. But typically what we do is we refinance them, pull the money out tax-free. So a typical example would be I buy a property, I earn 10% return on it when I first buy it. Now I improve it. I fix it up. I make it better, both physically and management-wise. Now my cash flow goes up to 20%. When my cash flow goes up to 20%, I've doubled my equity in the deal because the value of an apartment is directly related to its income. So when you double its income, bottom line, you're doubling its value. And in that case, your $300,000 would now be worth about $600,000. And what you would do is you'd refinance it and pull the profit out tax-free. So you'd pull out your $300,000 and you'd have your money back again. You could go do another deal if you wanted to do it, or you could just keep your money, whatever, but it's yours to keep because you'll never have to pay that back. That all's going to be paid back by your tenants. So that's the kind of return I'd want to see you get, Robert.
All right. Well, I was just curious. He said that he would give me a package. Should I try and look at his package first, or?
Well, I think if he's your friend or employer, you're going to want to look at it since you talked to him about it. And also for education, to educate yourself as to what differences in offers and possible returns are out there. I look at a lot of stuff that I don't buy just to get an idea what people are out there offering, because most people don't offer the kinds of returns that owning your own business can produce, Robert. They're not even close.
Well, what it is, I'm trying to retire, in the next 2 or 3 years. So
no problem.
I'm just trying to figure out where to put, some money in to where I can make some money down the road here. So.
Right. You're going to want to make that money the rest of your life, and that's where owning your own apartment complex. Or, by the way, we have people that do it passively. They invest passively with other lead investors that are really good, and they get in with them, and those guys are getting very good returns also.
Okay.
So that's a possibility if you want to look at doing something like that where you don't have to do any of it. But typically these apartments are run by management companies anyway, so you don't have to run it.
Okay. All right. Well, let me rumble that around, and I'll get back with you.
All right, Robert. Come check us out sometime. I think you'll be quite pleased at what you see compared to what you're seeing out there. All right, 866-945-6565. Holding now from Grand Prairie is Don. Don, how can we help you today?
I love your show. I just want to tell you I really enjoy your expertise in real estate. I'm an avid reader. I don't own any real estate, but I read William Nicholson's book many years ago. Anyway, you're just the best. But I just wanted to get your thoughts on my 28-year-old son is interested in buying a principal residence. What is the most optimal method if I wanted to engage in some help with it for him to do that?
Well, it's going to come down to what he actually needs, Don. What's keeping him from doing it right now?
Location. He wants to live in a specific area, and the inventory is very, very low, as you know.
Well, I guess then he's just going to have to stay on top of it till he finds something he likes. Does he have the money and the credit to buy it himself?
Oh, yes. Yes, but I wanted to help him as most fathers do. If there was a strategic way that would allow me to assist him the most, I would be interested in hearing your thoughts.
Well, okay, I can give you some strategies to approach it. Okay. However, here's the challenge to the strategies. When I go to buy investment properties, Don, I don't care what they look like or where they're at. I'm just looking for a deal. So it's easy for me because I find a deal, and then I buy a deal. There's no emotion wrapped up in it. The problem with trying to help your son buy a personal residence is you could work diligently at trying to find properties for him, but then he could turn every one of them down because he just doesn't like the looks of it. He doesn't like the way it feels or the way it lays out or whatever. So that
Exactly
becomes
correct. Yep.
difficult to help somebody find a personal residence for that very fact. But here's the bottom line. Personal residences are going to be purchased by a real estate agency. You're going to go through a real estate agency. That's all there is to it. These things sell very quickly right now, and they're on the market for very short periods of time. So what you got to do is get out there and get a couple different real estate agents looking for him and being willing to put up search engines in the specific area he wants to be. So let's say I wanted to live in A-Leaf. Then I would have 4 or 5 agents say, put me a search engine on for A-Leaf, and everything that comes up in A-Leaf, send it my way. And, just start looking at everything that comes up right away, because you're going to have to be there first to get it if you want to buy something in this market anyway.
Okay. Do you have time for one more thought I'd ask you about?
Sure do. We got about 2 minutes. Go ahead.
Okay. This will be very brief. As you know, a 15-year mortgage is very optimal in my view, but perhaps, I don't know if you have the same thoughts, but in my view it is. Anyway, can leverage be used if we both buy the property so that he could qualify for 15 and therefore get maximum tax deductions?
Man, you got me on this one here. I got to think this through for a second. Can both of you buy the house? Yes, but that's not preferent. That's not going to be a good idea for you. One, you're going to ruin two. You're going to have two people's credit tied up on one house. Not a good idea.
Okay.
They don't split the value of the house between one credit report and the other. You're both going to be on the line for the whole thing. Secondly, the tax deductions would have to be taken by each of you, so he would lose some of his benefits as a personal home resident owner. And since it isn't your personal residence, you wouldn't be able to use those benefits either. So they would just go wasted. So I don't think it's a good idea.
Okay. Well, thank you so much, sir. And you really do an excellent job of informing the public.
All right, Don. Appreciate it very much. And remember this, William Nickerson was so long ago, you're saying something about both of us that we even know who he is. That was one of the original guys, man, way back in the day. That's got to be, I think 40 years ago. When Nickerson was around, something like that. So, yeah, you don't want to be splitting those personal residences in half. That's probably not a good idea. What do we got here? We've got a good 30 seconds left here. Let's get a number out here again, 866-945-6565. When we come back from the break, I'm going to talk to you about cash flow. Rule number 2, there's got to be cash flow or there's no reason to do a real estate deal. Absolutely makes no sense at all that any of these financial planners would talk any of this crazy stuff when you realize that everything they have you do, none of it produces even one dime of cash flow, which makes no sense to me at all.
We'll cover that when we come back to the Del Walmsley Radio Show.
You're listening to the Del Walmsley Radio Show. Del will be right back with more life-changing principles in just a few minutes. Welcome back. Now here's some more unconventional wisdom to set you free from the man on a mission to retire America, one person at a time. Del Walmsley.
Our number here is 866-945-6565.
We talk about these crazy financial planners and these crazy ideas that they have about your life. Let's just cover this part real quick again. I think this is really important. My goal for you is to retire between 2 and 5 years from the time I start working with you. Their goal is for you to retire 40 years after they start working with you. So let's say that they're the best that they could possibly be as a financial planner, and it takes them 30 or 40 years to get you retired. And let's say I'm the worst real estate investor in the world, and it only takes me 5 to 7 years. Instead of 2 years because I'm the best, let's say it takes 5 to 7 years because we don't give you all the perfect advice. Do you even hear the difference there? Do you have any idea? And I'm talking about retiring at or above the income you earn right now. And they're talking about retiring below the income you're earning right now. I don't see how you guys even consider it close. I don't understand how anybody would want to take that road. You know, it's a crazy deal. So let's talk about this. What does it take to retire? It takes cash flow. So here's what I would like you to think about. What if I told you I want you to go buy a house? Figure out how much money you want to have at the end of your retirement plan, and let's buy a house. Let's figure out what appreciation will do to that house. You know, it usually doubles every 20 years, so we're going to take 30 years of paying off this home mortgage. And let's say you want $1 million, so we'll go buy a $500,000 house, and we'll have you make payments on it each month for 30 years. At the end of 30 years, you'll have $1 million home be paid in full, and you'll have a retirement plan. Now, if I told you to do that, you'd say, I'm ridiculous, I'm stupid, this is an insane idea. And then I ask you, how is that any different than what you're doing with your 401k? Your 401k, you're paying into it every single month for 30 or 40 years. At the hopes of, at the end of this time, it has appreciated, it has gone up in value, and your portfolio has gone up in value in some way, shape, or form. So that 30 years from now, you have more than what you've actually put in. That's your goal. That's all it is. It's that simple. Break this down to the reduction to the ridiculous. And that's what you're really doing. You're putting money in a box, hoping that when you open the box 30 years from now, there's more money in there than what you put in. That's all you're doing. Well, you could do the same thing with a house. You could put money into that box for 30 years, hoping that at the end of 30 years, that house would be worth more than what it's worth today. But you would never do that because it's so gosh darn stupid that you would never even think of being that stupid, but you'd be that stupid with a 401k. Now, what if I told you I could change your 401k plan to this? You put in an initial amount of money into the 401k and never put another dime in again, and for 30 years, your 401k will pay you $400 or $500 a month for the rest of your 30 or 40 years before you retire, and then at the end of the 30 to 40 years, you'll have $1 million in there. Now, that makes the 401k seem a lot neater, doesn't it? It makes it sound smarter. In other words, you're not paying into that 401k for 30 or 40 years. Well, when I buy a rent house, I'm not paying into that rent house for 30 or 40 years. I'm putting down a small down payment, and then my tenants are paying that mortgage down for 30 or 40 years. You don't see a check coming from me for anything. So we got to pay a house note. No, I don't pay the house note. Are you that dumb? I don't pay the house note. The tenant pays the house note. And then the tenant pays me another $400 or $500 a month for the privilege of living in that house. And then at the end, 30, 40 years from now, who owns the house? I do. And what's it worth? Double what we paid for it. Mortgage is paid off. There is no debt. How do you even compare the two? Where do you even get the idea 401k makes any sense at all? And it doesn't matter whether it's 401k or whether it's an IRA or whether it's Billy's college fund or whether it's paying down your own personal mortgage on your home to reduce your monthly payments on that. All of these ideas are dumb. They're worn out. They're useless ideas that are creating middle-class poverty all over the United States because 99% of every financial planner out there spouting off the same stupid ideas. And like I said, reduce it to the ridiculous. Would you be talked into buying something that paid you no cash flow on for 30 years in hopes that someday it would be worth more than you paid for it? Would you ever be that stupid? I would think not. But you are with the 401k. Why? Because you've been massively, repetitiously brainwashed by the financial planning institutions out there, both on radio and TV and your financial planners, because these guys are socking it to you. They're selling you garbage. They're charging you fees. They're getting rich at your expense. Now, that's just the downside of not having any cash flow. You understand that the more money you put in the 401k, it still doesn't produce you more cash flow. You realize the more money you put into another house gets you even more cash flow. And if you put some more money in, you get even more cash flow. And do you realize that you have the control of how much of that you want to put in there? And so you can literally buy your way all the way to financial freedom. I did it in 2.5 years. Some people do it even less than that. But you don't have to work for the rest of your life. And the other thing you have to understand is I become wealthier every single year. I buy more real estate, I become wealthier. I make more cash flow. As I got more cash flow, I save more money. The more money I save, the more real estate I can buy. The more real estate I buy, the more cash flow I make. That doesn't happen with your 401k. For 30, 40 years, you make the exact same thing you make at your job, and that's it. It never gets any better. And all you're hoping for is the end is, please, God, let there be money in my box. When I open my box 30 or 40 years from now, God, please, let there be money in my box, because I'm now going to quit my job and live out of this shoebox of money. Somehow I intend to live out of a shoebox of money for the rest of my adult life. And the answer is, it won't work. It never has worked. It isn't working, and it's getting worse every year now because the stock market is becoming more volatile. People's jobs are more at risk. The taxation systems are becoming even more abusive. The liberals have taken over the country. They've eliminated pension plans, everything else. And guess what? Social Security is broke. The government's broke. Are you just going to keep closing your eyes, sticking your head in the sand for the next 30 or 40 years and wake up and figure it out then that it didn't work? Or are you going to do something about it right now? That's what you need to do right now. Get yourself started. But remember, it's not the money, it's the lifestyle.
The information and opinions you hear on the Del Walmsley radio show are those of the host, Del Walmsley, his guests, and his callers, and do not necessarily reflect the opinions of this station, its affiliates, its management, or advertisers. The Del Walmsley show is for entertainment purposes only. Please consult a professional regarding your personal investment needs. Nothing presented on the Del Walmsley show constitutes an endorsement, recommendation, offer, or solicitation to buy or sell any product or security.